everyone, I'm Bakx-Friesen with Investor Smarts. Today I wanted to talk a little bit about mortgage insurance versus term insurance. It's a really important concept and a lot of people are a little bit confused about the difference, and so today I wanted to spend a little bit of time talking about it. So to compare the two, we're going to look at the dollar amount of the insurance on this side and time. Length of time as time passes is going to be on this end. So if we look at mortgage insurance, you might start with insurance that's this amount. Let's say it's $100,000. And over time, as you pay down that mortgage, the insurance also goes down. So if you were to pass away, maybe at this this point in time, and you had $40,000 left of mortgage, that mortgage is going to get paid off. Now, let's say you refinanced at around this point, and so your mortgage is actually $70,000. But you didn't redo your insurance at that time, which again is common. Sometimes people forget about the insurance part. So maybe your mortgage is actually, let's say, a little bit of time has passed before you passed away, and so maybe your mortgage is at $65,000, but you're only going to get the $40,000 to pay it off. So in case of refinancing, make sure if you do have mortgage insurance to redo the policy so that you're covered. Now at the same time, had you got term insurance for $100,000 at this point, term insurance will cover you over the length of the time in the same way, except it's level. So term insurance can be looked at as level insurance. So if at the same point when you had passed away, instead of the $40,000, you're going to actually still get $100,000. That's really important because many different other expenses can come up when you pass away. Maybe there's your funeral expenses, or you still have other loans, and those kinds of things. So, or you just want to have a bit of cash in your pocket because you're going to have other expenses that come up. So instead of getting the $40,000, you'll have an extra $60,000, the difference between $100,000 and the $40,000 mortgage, to cover other expenses, which is really good. A common concern is that for this benefit, mortgage insurance costs the same as term insurance, or would term insurance cost you more because of this benefit? But in fact, the cost is usually the same, or sometimes you'll even find that term insurance can be cheaper. So this is really good to look at. Now your bank will usually offer the mortgage insurance and make it really convenient when you're buying your house. But if you take the time to speak to an independent insurance agency, or if they offer term insurance, to look at that instead. So in the case where you had refinanced and your mortgage is actually $70,000, you're not caught with some debt left over or a small mortgage remaining. You would instead just have $30,000 left. And so term insurance just gives you a lot more benefit and gives you more flexibility and, again, peace of mind. So this is a really important difference, again, between term insurance and mortgage insurance. So be sure to check that out. Make sure that you're fully prepared and you're fully covered, and that your interests are covered in case of death. So if you have any questions, reach out anytime. I'd love to help you. It's Candace from Investor Smarts. Take care.